Most people think real estate investing requires thousands of dollars, exceptionally good credit, and a sizable down payment after a lengthy bank approval. If you don't have all of those, then you're out. But that is changing. People are buying into rental properties with as little as $50, not an ebook course and not a simulation. Real properties, real tenants, real income. In this video, I'll break down how that works and what you need to know before you buy in. So what is fractional real estate? This is a single rental property split into pieces. Instead of buying the entire property, you buy a share. And when rent comes in, you earn your portion. This is part of a bigger shift called real-world asset tokenization, where physical assets like real estate are divided into digital ownership units. The property still operates like a normal rental, with tenants and maintenance, but all of those responsibilities are handled by a professional management team, not you. This is currently happening on platforms that allow fractional ownership. One company in particular, Lofty.ai, lets you start with as little as $50. A property is placed into a legal structure, then divided into shares, and the average investor can buy those shares. When the property generates income, you earn your portion. Some platforms use blockchain technology, but the core idea is simple. You're buying a small piece of a real income-producing property. If you're new to real estate investing, don't overthink it. Start small, even $50. This is about learning the process. You have your choice of investments, so start with a property where cash flow is already happening. Ignore the hype and look at yield and expenses. Reinvest your earnings. It's disciplined investing, but only if you stay consistent. Real estate has always been one of the most powerful wealth-building tools, but most people couldn't afford the price of admission. High costs, maintenance, tenants, it's a lot. Now that barrier is much lower. You can now invest without managing property or dealing with tenants. For many people, that's the difference between waiting on the sidelines and finally starting. Here's what people don't say. You're not making real money with $50. You might only earn a few dollars over time. This is slow, it takes patience, and there's still risk. Vacancies, expenses, platform changes. So this isn't a shortcut. It's just a lower barrier to entry. At this stage, you're not buying income. You're gaining experience, learning how real estate works, how income flows, and how investments grow over time. Once you understand that, you can scale, add more capital, diversify, and reinvest. That's where this investment becomes meaningful. So is it worth it? If you need fast money, then no. But if you want a low-cost way to start learning the real estate game, then yes, start small, stay consistent, and build from there. Like and follow the channel for more new money strategies.